What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Wednesday, January 7th, 2026 live stream. Hope you all are doing great. If the audio and the video is good, just give me a thumbs up. Just want to make sure everything is working well. We are sitting at all-time highs. The S&P 500 is sitting just shy of 693, 694 for the SPY. And of course, the S&P 500 itself, the index, is sitting at just over 6,944 points, sitting at a brand new all-time high, with the Nasdaq sitting at just over 23,500 as it slowly and steadily kind of creeps up near all-time highs again. So again, let me know if the audio and the video is good, and we should be all good to go and ready to analyze the markets here, as SanDisk and Micron, some of the more memory stocks, companies that are providing a lot of chips for memories, are the ones rallying really hard. I mean, you got Micron pushing up 10% year to date. This stock is up over 16%, and SanDisk is on a whole different level. It's more than doubled since November. It's up over 1,100% since April last year. So in just a matter of about 9 months, the stock has gone up over 10x. It's up 43% for the year already, and we're only 3 days in. So those stocks pushing up. Axon is also, or has been, part of our shopping list, and our analysis is starting to move up very nicely. Is up over 6% yesterday. Zeta is another one that our members, our community has been talking about, up over 9.8% yesterday. Vertex Pharmaceutical coming to life once and for all, finally getting back up to over 468. It's very close to all-time highs again. So all-time high sitting at 524. It is only 10 to 11% away from all-time highs. Amazon, also part of the shopping list, seeing some life here, up over 3.3%. And Cadence Design Systems also in our shopping list, pushing up a little bit over 4% yesterday. Lockheed Martin, Mercado Libre, Palantir. Then we got FIGR, so Figure Technology, pushing higher. Salesforce, Palo Alto, a lot of momentum coming in. Then of course we had some other parts of the market: Tesla, Iron, SoFi, Robinhood, AMD, all of these stocks selling off quite aggressively yesterday, as there was a little bit of rotation outside of those companies over to other parts of the market. So hope you all are doing great, and once again, welcome on board. Video is a bit fuzzy, but can hear you just fine. Maybe try and refresh. It should work. Hopefully the audio and the video is better and there are no technical issues. So just give me a thumbs up and try to refresh. It should be better. What's up, MoneyVest community? So good to have you all here. Good morning. We did have the ADP numbers come out earlier today, so let me just bring those over. And Joel's numbers are scheduled for 10 a.m. Eastern. So for later today, we do have the JOLTS numbers coming out, which is going to be very important for the market, as well as the unemployment numbers later this week. So ADP non-farm payrolls, in other words, ADP employment report, coming in at 41,000 versus the consensus of 47,000. So a little bit shy of what the expectations were. Prior numbers also getting revised for worse instead of 32, or better. Negative 32,000 was the prior number, and prior revised is sitting at negative 29,000. So that's where we are at the moment for ADP employment report. Again, Joel's numbers later today at 10 a.m. Eastern, and then the employment situation, unemployment numbers, official ones for the month of December, coming out at the end of this week. So Friday at 8:30 a.m. Eastern. So Joel's expected at 7.65 million. And then unemployment numbers expected at 55,000 jobs added for the month of December, with 4.6% as the unemployment number here, unemployment rate. So Trump's Greenland considerations, as mentioned in one of my previous videos and market updates, as well as Donald Trump continues to consider using the U.S. military to acquire Greenland. White House Press Secretary Caroline Leavitt told CNBC that Trump is weighing a quote-unquote range of options, including using of armed forces. That is actually getting pretty crazy of what now is possible in the world that we're living in. European leaders rebuked Trump's repeated calls for Greenland to become part of the US. They wrote in a statement yesterday that Greenland belongs to its people. It is for Denmark and Greenland and them only to decide on matters concerning Denmark and Greenland. And Trump has said the US needs Greenland for its strategic location from a national security perspective, and the Arctic island also boosting untapped mineral resources, but is staring down a slowing economy. So of course, got lots of very, very spicy details, as also learning about Venezuela selling oil to the US, or US having access to Venezuelan oil indefinitely for now and until we have any further information. And on poly markets, if you look at will Trump acquire Greenland before 2027, it's been trending up since the beginning of this year. It was around 6% on January 3rd. And just 4 days later, that number has more than doubled to over 15% chance. It has been, as you can see, creeping up a little bit higher. So that's that, up and away. So stock market continues to scale walls of worry here, as a lot of individual stocks, including the likes of Amazon, Micron, SanDisk, as well as Chevron, Exxon, defense companies, they're all the ones that are rallying higher. Speaking of NVIDIA, chips on the table here. We got Jensen Huang saying yesterday that there's a very high demand in China for its H200 artificial intelligence chips. He said the company has restarted production of the chips and is ironing out final details to export under the specific special licenses that the US government has granted them. And they're going to be taking a piece of the pie, a small cut. Paramount offered Warner Brothers Studios another offer, which they rejected. The board said it still believed Paramount's offer was inferior to Netflix's $72 billion deal. So Paramount has repeatedly failed to submit the best proposal despite feedback from the Warner Brother board. So that's that for where we are in terms of those updates. And S&P 500 flat right now. We got QQQs slightly down about 11 basis points, giving you a quick round of all the asset classes here. Gold is slightly down, trading under $4,500 per barrel. Year to date, brand new year, starting off with a 3% green. So far, we got silver prices sitting at just over $77 a barrel. They are down over 4.7%, so selling off, $77 per ounce. Keep getting confused between barrels and ounces. But yeah, 77 bucks per ounce for silver. Still green, up almost 7% for the year. And gold is up 3%, $44.50 per ounce. And oil prices sitting at just under $57 per barrel, sitting right on that support of $55 to $56, as Bitcoin also starts to get rejected at this resistance of $94,000, $95,000 again, pulling back a little bit. And Ethereum also, once again, struggling at under $3,200. And this is going to be that area of resistance at $3,300 for Ethereum as well. Volatility stays a little bit more consolidated. Lots of indecision, sitting at just over 15 right now for the VIX, and market breadth has gotten better, as over 70% of stocks are now trading above their 20-day moving average, and 65% of stocks are trading above their 50-day moving average. So we have seen the market kind of broaden out a little bit in 2026, as Magnificent Seven and especially big tech have struggled. So if you come over to our platform, and it's a very simple observation, right? So if you come over to market concentration, $381 billion worth of inflows yesterday. We had over 60 basis points worth of rally in the S&P. Take a look at Magnificent 7 and top 10. Outflows, money rotating out of these companies, going to other parts of the market. And this is exactly how the market is broadening out to other sectors and other parts of the market as well. And as a result, more and more stocks are now trading above their moving averages, because it's a pretty big lift to go from, if I were to zoom out this entire chart, you'll notice it's a very, very big lift from 41% to 70%. So that means 30% more stocks in the S&P 500, which if you take a look at the S&P 500, that's 150 companies, right? 30% is 150 stocks are now trading back above their 20-day moving average. So that is a lot of stocks moving back above their moving averages in a span of 4 trading days. December 31st, Wednesday, and then that's it. January 1st was a holiday, Friday, Monday, and Tuesday. 3 trading days. 3 trading days, and we had over 150 stocks in the S&P 500 trade back above their 20-day moving average. So this is the market broadening out to other parts of the sectors, other sectors, and other parts of the market. So that is good to see. And it's not like the liquidity is coming out of big tech or Magnificent Seven, although some stocks might be hurting. Tesla's hurting right now. Palantir's been pulling back a little bit. SoFi's been hurting. But other companies definitely getting a lot more of that new money coming in. So that's good to see. It's a good sign. However, this is part of the analysis because as markets continue to move up and we get up to those overbought levels, fundamental risk reward starts to become a little bit unattractive and unfavorable. That's where we prepare with more cash on the sidelines for better opportunities, because it doesn't take a genius to recognize that every time we get up to those levels at 80%, 85%, 90% of stocks trading above their moving averages and we are in an overbought level technically and volatility is low, what comes next is not a surprise. It's a pretty obvious market cycle, and that's exactly what we have to prepare for. So that's the entire roundup, everybody. Good morning. Good morning. Everybody, thanks for joining. Kevin, LOL, where's the money going? Well, it's been going into defense. It's been going into healthcare. It's been going into industrials, materials, utilities. A lot of those sectors are doing very well. So if you come over to the sector analysis and if you just simply look at the performance so far at the start of this year, sectors that are indeed leading, the one sector that's actually moving up the most is materials. So we're seeing that continuation for gold and silver that are up year to date, 3 to 6%. Crypto has been moving up as there has been a little bit more of a risk-on rally from a crypto perspective. Platinum is up over 9% year to date. So materials is a leading. Then you've got industrial. So materials, industrials, you got financial services, healthcare, energy, and real estate. Those are the sectors actually leading this market higher. Where is technology? Where is technology? Where is communication services? Technology is right down here, 70 basis points. Utilities, flat. And then you've got communication services, 70 basis points lower. So Google, which was a winner last year, is not getting started on the best foot. Meta, which was essentially consolidating sideways, has also been consolidating still. Lots of indecision. I've been milking Meta for the last few weeks. And as a result, that sector, along with technology, consumer staples a little bit, as well as utilities, is struggling a bit. But a lot of that money and liquidity going to crypto, commodities, carrying forward that momentum from last year, and then sectors that are very much significant to those asset classes. So that's where capital is going to. It's almost a mega lift. Yeah, I mean, it is. It is quite literally, it is a mega lift of the entire market. A lot of the other sectors and stocks are getting a big lift to the upside. So yes, 100%. So let's go over to questions. 20 minutes until market opens. What are your burning questions for 2026? Where do you want to invest? What opportunities do you have for us? Let's talk about it. Let's run through a quick Q&A for the next 20 minutes. I'm going to go over a lot of stocks, every possible question given the time, and let's talk about it. So any questions, let me know. And that's where we are. Unemployment numbers later this week. So on Friday, they're going to come out. Kevin says, I'm going to hedge with CSG here. Let's take a look. Energy Corporation, or no, that's not it. What is that, Kevin? Enlighten us, please. What is CSG? Happy to learn. Will Max 7 earnings make up for the losses in technology stocks? I think their earnings are going to be pretty solid. I think we're going to see some pretty strong growth. I think the market is just repricing a little bit of the valuations that they were trading at and kind of focusing. It's not that the Magnificent Seven is less attractive. It's just that other sectors are slightly more attractive. That's, I think, what's going on. So I'm obviously not selling any of my big tech or Magnificent Seven stocks because I continue to believe in them long term. I think what we are going through is more attraction and more liquidity flowing towards energy, industrial materials because of this momentary potential that we're seeing in those sectors for a short to medium term. Of course, over the weekend, the news that came out, it kind of gave a nice little lift for energy stocks. So Chevron with a massive drop after pushing up over 5%, is starting to roll right back down. And as we discussed, right, this was going to be more of a short-term temporary lift. And as a result, that's where liquidity has been flooding over too. But I do think Magnificent Seven and Big Tech continues to be a very, very strong play for the long term. CSG, copper, silver, gold. Is that what that means? Come on, Kevin, stop being so cryptic. You have to give us the T. What's the T? What is CSG? Now you've got me all curious. CSG. Let's see. What does CSG mean in investing or stocks? Let's take a look. CSG Systems International? No, but I do like that guess. Copper, silver, gold from Chris Dance Media. Maybe that's really what Kevin means when he says he's going to be hedging. Okay. GSG. Oh, GSG. I missed it. Okay. Commodity Index Trust. Okay, that makes more sense. Okay, but we were close with CSG as well, right? So, okay. Polar tracking version of S&P GSCI, giving it fairly neutral exposure to broad energy commodities market. Instead of holding contracts in the underlying commodities, GSG only holds long-dated contracts. Perfect. That makes a lot more sense for hedging with GSG. It seems to be a lot of consolidation right now. It does not have any... volume is actually quite low. Only 195,000 yesterday. That's crazy low. Dude's been hanging out with Michael Burry way too much. It's crazy. So volume only 195,000. That is something I would be careful with because the average volume is about 753,000. We are definitely looking at a very illiquid ETN provider. So that's why you'll see, like, even on 30-minute time frame or 5-minute, 15-minute time frame, it starts to break out on those charts. The candlesticks are rather liquid with the spreads being super wide is what I'm going to assume. But yes, makes a lot more sense now. All right, SoFi, what is your view for entry? So looking at SoFi, happy new subscriber here. Happy New Year, everyone. Hoping for a great year. Happy New Year to you too. So glad to have you here. Thanks for joining. SoFi, I've got a support at $24, $25. So we're seeing a lot of consolidation sideways in that range for SoFi. So you can see that it's been, kind of rather range bound. Resistance all the way up to $30. It just can't seem to break out above this level. And we've got a very strong support at $24, $25. I think this right here is going to be a pretty decent level to consider for SoFi as an area of accumulation or selling puts all the way down to $20. Of course, the lower it gets down to, the better the opportunity, in my opinion, for SoFi, because that's true for any stock out there. Lower the price, better the opportunity, because price is what's going to determine your future return. That's been true since the beginning of time when when we're all starting to invest. Reason being is because you can have a great asset but pay the wrong price and not make any money, or you can have a not so great asset but pay the right price and still come out ahead when it comes to making return on investment. So really, price is everything. So high quality company at a great price is what makes for a very, very solid risk reward ratio. And SoFi is a fantastic company. All we have to do is just nail down the price. And that's why a lot of our analysis is making sure that we do the homework, we're understanding these businesses, and at the end of the day, we just need to nail down and execute on the price. Let it come to us and then execute on that price. So in SoFi's case, $24 is going to be that support all the way down to $20. Those are some two levels to watch for SoFi. Okay, let's see. Which stock do you like more, SanDisk or Micron? Do you see any pullback for these stocks? So I'm going to answer your second question first. Yes, I do see a pullback in these companies because of how technically overbought these stocks have become. I mean, take a look at the daily chart, 77 RSI on the weekly time frame, over 80, and on a monthly time frame, it's not even there. It's not even existent over there. Micron, over 86 on a monthly time frame. So long answer short, yes, I do see a technical pullback or some kind of correction for these companies. That's why it's very important to stay very, very cautious and careful and monitor your trade positions if you're trading it or if you're investing in it. Now, between these two, I think Micron has better fundamentals. SanDisk is still looking to, well, to be honest, SanDisk has very strong growth. Micron has better fundamentals. Let me just put it that way, because SanDisk's earnings, I think, is one of the reasons why it is just blowing up right now. It's expected to go from like $3 to over $13 this year. That's like a 500% increase in earnings per share. So that's insane, right? It's because double is going to be 6, quadruple is going to be 12. It's almost 500% increase. And as a result, I mean, the stock has just gone crazy. But Micron, I have covered on the channel before. I do like Micron better from a fundamental standpoint. The growth is not going to be as strong as SanDisk, but it's still triple, 300% expected growth in earnings, and revenue also expected to be a bit more consistent. However, these industries, especially in semiconductors, tend to be very, very cyclical. I was just reading a report earlier today which mentioned that they go through these boom and bust cycles where, you know, there's a shortage, then there's an oversupply, then there's a shortage again, then there's another oversupply. So they tend to be incredibly cyclical in the way they operate. I mean, look at Micron, right? Not doing anything for a few months, since 2024 all the way until May 2025. So it was a year and a half, about 18 months of not doing anything, and then just absolutely exploding through the roof from $61 to over $343. So it kind of goes through these cycles where it can consolidate and it can even drop 60% in a matter of 12 months, and then it can go up like 450% in just a few months. So how were the ADP numbers? So ADP numbers came out earlier. We came in at 40,000 something in terms of those employment report numbers. So 41,000 jobs added in the month of December versus consensus of 47,000. So that was slightly below expectations here. But I think the most important number for today is going to be the JOLTS numbers, 7.65 million. We're going to update that in our spreadsheet. So if I bring you over the unemployment spreadsheet here, we're going to plug that number in for JOLTS. So 7.65, and that number will maybe make that ratio a little bit better for the job openings versus unemployed persons ratio. So 0.98 is where we would be if this number comes in at 7.65. And then of course, we'll take a look at the unemployed persons as well, because last time I checked, I think those numbers are correct, but let me just update that very quickly. Civilian unemployment on BLS website, for the latest numbers, we are sitting at 7.831. Perfect. So 0.98, which would result in an improving situation for unemployment, unless the report for this Friday tells us otherwise. If this number skyrockets even more, if it gets up to over 8 million, then we're back to 0.96. Well, we're going to stay below 1. And it's crazy to think that this number at one point was at 2.5. We had over 2 jobs for every 1 person that's unemployed, and things have gotten worse from a labor market standpoint with artificial intelligence, with immigration policies, with of course the rise of artificial, I mentioned earlier. It's just been getting worse in terms of the labor market. People are not able to find work. There's fewer jobs openings for companies, and unemployment numbers have been going up. So there's if you do the math, 7.8 million from November 2025 compared to November 2024, that was at 7.1 million. So 700,000 more people unemployed in about a year in the US. All right, let's see. All right, so I covered that question, LAC. So let's take a look at LAC, Lithium Americas Corporation. Looks like we've done some analysis on this. And for commodity stocks, again, I'm going to reiterate, they tend to be very, very volatile. So as long as you're okay with that volatility and you're okay with that level of risk, then it makes sense, because you can clearly see, the level of volatility you're dealing with, 270% in a span of just 3 weeks, and then a 60% drop, and then another 30% gain in just a matter of 2 weeks. So they can be very, very volatile in the way they trade. And so Resistance right now is going to stay put at 560. If it breaks out, next target 755. Support level roughly around 411 for LAC. Green Day or small pullback. Your thoughts on XOM or USL? RCAT defense drones, like you not big on small caps, speculative, but this looks attractive. It's not like we're not into small caps or mid caps, but we do like to keep a threshold for having some decent volume, and then also a minimum market cap of at least $1 billion. So it kind of meets that criteria, because every company starts somewhere, right? We have to at least have a threshold for these small cap, mid cap companies as well, because that's where a lot of that growth comes in. As I mentioned before, I mean, the next 5 years, I'm more confident that SoFi can probably give me more returns than NVIDIA, even though NVIDIA might be a better, more valuable, higher quality company. Why? Because just the way the numbers work. I mean, NVIDIA is a $4.5 trillion business. SoFi is a $30 billion business. So if I were to purely bet between those two, I'd be looking at SoFi, because it's a much easier and clearer path for 30 billion to go to 100 billion. That's 3 times, versus for NVIDIA to go from 4.5 to 9 trillion. It's only 2x. So the latter is more difficult. The former is an easier path. But when it comes to the probability of success, I would assume NVIDIA has a higher probability of success to double than SoFi has to triple. So that, is what we have to analyze. So with any small cap, mid cap, there is both the understanding of how much returns can we generate, while also assigning a probability of success, because we don't want to be looking at moonshots all the time. We don't want to be like, okay, there's a 1% chance we're going to make 100x. We want something that has at least over a 50% chance that we're going to make 5x or 10x. Those are good asymmetric opportunities for us to look at, right? Because we also want to be a part of the story. I mean, Palantir, we've been talking about it since it was at like $5, $6, $7. But it also did have back then a pretty high probability of success to get up to over, back then we were talking about $100 billion, and now we're talking about almost $1 trillion. So if one company has that potential, I think Palantir certainly does. But looking at RCAT, it doesn't seem to be super profitable. Massive losses coming in fact, increasing every single year, quarter over quarter. Also, the picture is not super impressive, but we'll definitely keep this on my radar for something for us to analyze. $14.80, $15 is going to be that resistance, with a support level that's going to stay put at 460 for RCAT. 5 more minutes until market opens. Meta needs to stay below 660. Tesla needs to rally a little bit here. It's a good thing that Meta's trading back under 660 at 657 is where we're at for Meta platforms. A lot of consolidation sideways. It's been pretty much in a range for some time now. Netflix, $91. We're back recovering above 90. Microsoft has also been consolidating and struggling from its all-time highs. It's been weeks now that Microsoft's been down in a correction. So again, our platform actually shows you is that exactly where every stock is relative to all-time highs. So this is going to be that table. And if I bring you over to the delta, you've got the S&P 500 all-time highs, Dow Jones all-time highs, S&P 500 financials near all-time highs, healthcare all-time highs. Russell 2000 has made a very strong recovery. So IWM is back at all-time highs. Very strong recovery from 230s from back in November. It has recovered over 12.5%. NASDAQ 100, small dip, 2% down from all-time highs. And these are all of the individual stocks. Google, 4% down. Amazon, just under 7% away. Apple, almost in a correction. Nvidia's in a correction. Tesla's in a correction. Microsoft in a correction. Meta, almost in a bear market. So is Broadcom. AMD is very close to a bear market, almost 20% down from all-time highs. And then we have Qualcomm, Salesforce, Netflix, Oracle, Adobe, all in a bear market, down over 20% from all-time highs. Adobe's taking a very, very long time to recover. It's also not part of the shopping list anymore. Yes, so Zeta Holdings or Zeta Platforms, we have been talking about. I know Walter can speak for it much better than I can. A lot of the members have done some analysis, significant analysis on this company. $26 is going to be the next resistance. with a support level that's going to stay put at around $22. So this is a support, and again, getting up to those overbought levels, moving a lot on momentum. Same thing with SanDisk. Again, the report I was reading mentioned there's a lot of army of retail traders are now plowing money into SanDisk on this momentum, but be very, very careful. What goes up comes down eventually in this parabolic fashion. A lot of hype was towards iron, right? Still a very strong company, but dropped 56%, 60%. It got cut in half. A lot of hype was and still is on BMNR, thanks to Tom Lee, and we did witness a 65% drop from August till November. 2 months, 3 months. It does not take long for this to happen. So again, if you're a part of this channel, if you've been part of the community for a long time, we understand a lot of these market cycles where stocks can go parabolic, absolutely crazy returns, but it comes with a price. Volatility and potential corrections and pullbacks are the price. So don't overstay your welcome. If you're trading it in and out, grab the bag, move on. If you're investing in it, then of course we have to analyze the fundamentals, the valuations, the long-term growth, a lot of other things as well. Okay, this is the first full week for the market. So S&P 500 this week is green, up over 1.2%. So that's good. We are green for the year as well, starting us off on a very strong foot, up almost 1%. December broke the streak for the market, 7 straight months in a row. We were green, December was red slightly. And so far in January, we are indeed pushing higher. BMNR is a thorn in my side. Makes two of us, Kev. We're all hurting with BMNR right now. But in Tom Lee we trust, don't we? And now it's a small position for me. So we'll keep it that way. For some of these asymmetric opportunities, keep a small position if your confidence level is not that high. And a lot of your allocation depends on your level of conviction. I've said this before many times. If you're extremely confident and the highest conviction in just one stock, that can be 100% of the portfolio. If your conviction's in 3 companies, that can be your allocation for 3 stocks. Concentration, one of the lessons learned last year and shared in my previous video. Concentration builds wealth, diversification keeps it. You're better off investing in a handful of high quality companies than 50 not so great companies, and that's where the focus always needs to be. It's quality over quantity, 100% of the times. What about Oracle? We covered Oracle earlier, so we talked about that one before. Again, I think it's come down to some pretty attractive levels now. That was the support at 184, 185. And we talked about the valuations, rating at over 45 times earnings, has now been cut down to 26, 25 times earnings. So valuations reset, market repriced since September last year. And now Oracle's rather better value for money at the prices that it's trading at. So, still lower highs and lower lows. It's in a very strong downtrend, no confirmation of this breakout, but fundamentally it's gotten better than where we were before. So, all right, markets are indeed open, and we are looking at a great start to the year so far for the markets and commodities and crypto. Those are the 3 big ones: commodities, crypto, and equities. All 3 of them starting off the year on a very strong note. S&P 500 692, 693, QQQ 623, Nvidia 187. It needs to be below 187. Come on, Nvidia, give me 186. Meta needs to be below 660 for my calls to expire worthless and out of the money. And then Tesla needs to start ripping here soon so I can actually sell some calls, some $1,000 calls. You guys take into account the 4-year crypto cycle theory into account. According to this, the crypto bear market already started. I don't. I'm just purely looking at it from a technical perspective. I'm sure there's a lot of truth into these longer cycles for crypto, 4 years. But I'm purely looking at it from a technical perspective. And if it makes sense, then I'm just going to accumulate more so on the BITX side and then make a decision from that. What are your thoughts on small caps at the moment and heading into 2026? I think if we do get rate cuts, I think that's always a good thing, a good tailwind for growth stocks and small caps specifically. Any kind of distress, small caps are the first ones to go because they're not very cash heavy companies, right? They don't have a war chest of cash similar to Apple and Microsoft. In any kind of distress or uncertainty, investors, companies, organizations, entities who have cash are the ones who survive. The ones who don't survive. And small caps usually don't have a lot of cash on the balance sheet. So I would look for companies. Small caps as a whole sector tends to go first in terms of a correction or pullback. It sells off more aggressively. But I would look at individual companies within that sector. If you are considering them, make sure their balance sheets are good. Make sure they have plenty of cash available to survive and, essentially be able to suffer through some kind of uncertainty if there is one in 2026. So that's what makes investing so incredibly beautiful and challenging at the same time. We're trying to prepare for all the uncertainty that we don't even know about. And that's why it is so amazing to be in this business, because there's constant uncertainty. You're dealing with constant levels of uncertainty every single day. Curious why it's not in your shopping list. Which company specifically? Which stock are we talking about? Oracle? Oracle is in my shopping list. It is. If you come over to shopping list here, if you search for Oracle, it's right there. There's a lot of very, very good businesses. Like, we've, as a community, we've done a very good job. I'm actually proud of a lot of the members, almost all the members there, that have put in the work. And we've talked about a lot of businesses together over the years. And it's a list of some, underrated stocks, companies that you may not have heard of, and then companies that are obviously leading this future innovation and technological advancement. And there's something for everyone. So I always suggest, spend some time going over those companies, build a list for yourself, a handful of companies that you have a high conviction in from that shopping list. And then that's it. Then it all comes down to execution, allowing for the prices to come down to your buy targets and then executing on that. That's, as simple as I can put it. Spotify is part of it. Fantastic business out of Europe, coming down to a bit of a pullback now. So I think the buy targets are pretty close, but it's down over 30% from its all-time highs right now. So one that's on my watch list for sure for 2026. Axon, nice little recovery right now is what we're seeing. Ubiquity also added recently. Very strong company. Done a full analysis. The only thing is there's a key man risk here, a lot of concentration at the top level from the CEO. But nonetheless, very well managed, very profitable, high margin business. It's this company. All right, everyone. So thank you so much for joining. I really appreciate you all. I've just been in back-to-back meetings with a lot of our members. Again, if you want to schedule calls, email me at admin@moneyvest.com, and I'm more than happy to help. All this uncertainty is the root of my trust issues. 100%. It's like, one day you've got one thesis, the second day you are reading in the news about something else. Of course, we all have trust issues. So thank you so much. Happy investing. And I'll see you all in the Discord. We'll chat more over on there. Thank you so much. Take care.